Hey, what's going on, everybody? I wanted to make a video to show y'all how I use the 10x bars on steroids indicator combined with the weekly wires indicator so for flawless flawless iron condors. Gonna mess that one up. But here, I'll go ahead and show you what I have put together. Something to note right now is you see these bluish dots. Those are called volume dots. You'll see more of them here in a minute. But just note that those are areas where greater than 50% of the average daily volume or average volume is coming in for whatever time frame. So in this case, since this is the daily chart, it is greater than 50% of the average volume. And if you could tell, they happen on most breakouts. So here was a daily breakout, and this is Tesla. If you couldn't recognize, the volumes coming in, consolidated again, and then boom, broke out with conviction on the volume or with volume. So, all right, I'll go ahead and continue on. All right, so what are 10x bars? They are a combination of the ADX and the DMI, and that's what dictates what color it paints the candles or bars, whatever you wish to use. And then when there is greater than 50% of the average volume for whatever time frame you're looking at, it puts a dot on there so you know that there is significantly more volume coming in. And if you don't know what the ADX is, I took a little screenshot here from Investopedia from the ADX. And I'll also put the link down in the description box below for this on Investopedia if you wish to research it a little more. But the ADX is the average directional index and is mainly a calculation from a moving average of price range expansion. So the greater the price range expansion is, the higher the ADX is. And then the DMI is a directional movement indicator, and those are plotted by two indicators. Basically, you have a positive and a negative. If the positive is stacked above the negative, then it's positive, and negative is above the positive, then the trend is negative. So it's relatively pretty simple there. So yeah, it basically, that's just how it dictates trend. It shows you which way momentum and trend is going. So here is this picture of the Qs on a 30-minute chart. It does it pretty well. So what we need to focus on right here first, let's go ahead and do the ADX. So this lower portion of the box right here, right? And then this green line right here is the 20 mark. So every time that the ADX is below this green line, then it is considered to be a weak trend. Hence why right here is yellow, because it dropped below, showing that the trend is weak, so it just chopped around sideways. And then anytime it's above this 20-minute or this 20 level mark, the trend is positive or is showing a trend. Now, on the next slide, I'll show you how it dictates if it's going to be bullish or bearish. Come on. There we go. All right, so this green line and red line is the DMI, and this white one is the ADX. So this explains it pretty straightforward without having to overthink it. So here is the 20 mark, right? Enough for me. So the positive is above the negative, and the ADX is above the 20 mark. Hence, it paints the candles green, which the trend is higher. The momentum and the trend is higher. So right here, it doesn't matter if the positive or negative is above the ADX. It doesn't matter because it is below the 20 level. So that means it doesn't matter. There is no trend. So therefore, no matter what, it is painted yellow. Now right here, where it peaks its head above 20, right there, and at that time, the DMI negative is above the positive, so therefore it is red. And right here, see this little blimp where it barely peaked above the positive, peaked above the negative. That's where you get this little green candle painted right there. And then the negative momentum obviously pushes it down. So that is the 10x bars. It basically shows you where trend and momentum is going, which direction. So there's no, it's really straightforward on that. There's no real secret recipe to it, if you will. All right, so the 10x bars on steroids altogether. So we already discussed the DMI. So we know how this works, right? The ADX, we already discussed this one. Next, whenever you have a trend, you need volume is a good indication as far as how far a trend is going to go. So now, instead of having all three of these things stacked up down here, you could have them all working together. So just like we did on that last slide. Well, I was going to go back and show it again. Finally. Okay. So instead of having all these down here on the bottom, you just have it painted one way, and then whenever you get a greater than 50% spike, then you just have, actually probably just, it's really not that big, but anyways, you get the idea. Then you'll have the volume dots on the trend, so it tells you when there is more fuel in the tank to push it higher. Right, and this is what it looks like. So, and same chart, no reason to beat a dead horse. Momentum's going higher, sideways, and down. And then these 10x bars work really well with the squeeze as well. So here is Tesla. And if you've been trading the last few months, I'm sure you're aware of the ginormous move it had. So if you saw my previous video about with the squeeze, so right here is my squeeze indicator. Right here is the 10x bars. Chart I have on steroids. What that means is, first of all, you get all these time frames. So this is telling me that the daily is yellow currently, which it is right here for Tesla, taken today on October 29th. But the 2-day, 3-day, 4-day, weekly, monthly, it's still showing momentum is higher. And then you could actually go all the way down to the hour, 1 minute. Whatever I choose the chart to be, you get that chart and higher. All right, so now back to how you get directional with the 10x bars. I was gonna show this real quick before I show you the iron condors, but basically, if you watched my last video about the squeeze, so just go real quick. If you already know, just bear with me. So the EMAs are stacked positive, right? Boom. We have a squeeze. Price pulls back to near the 21 EMA. Momentum is starting to shift higher. And these dots right here, or not dots, but the green candles with the dots in the center and whatnot, those are called early in indicators. What that means is that the Keltner channels, sorry, not the Keltner channels, but the Bollinger Band is starting to flare out of the Keltner channel, indicating that a move is potentially about to be happening. So when you get these, it basically saying you better get in soon because we're about to be about to move one way or another. So now how you use these together is, so you have a squeeze, and say you just bought long calls, all right, and you bought them near the 21 EMA, but you don't know how long to hold them. Now, if you look on your 10x bar chart, you have all that volume coming in. So for one, you have the green 10x bars, and then you just have volume coming in and in and in and in. So it tells you that there is a lot of volume coming in, pushing this thing higher. So it helps you stay in the trade to get as much out of it as you can. If you just have long calls, if you just had a debit spread or credit spread, and it's in your max gain window, then you could just hold it there because there's all this volume coming in, pushing it higher. So anyways, that is just how you could use it for a squeeze, how you could work them in conjunction. So basically, if you have the larger time frames, positive, and then if you've seen the multi-squeeze indicator that I have in my other video, they could all be positive, and then it helps you get conviction to the upside. Now, I just wanted to show that. And the same goes for the bearish. It's the same thing, just flipped. All right, and here's crowd. I did a targeted butterfly on this. I should have just done a more directional trade, but here's just one more example of using it to go directional versus a sideways. So anyways, like I have right there, momentum across the larger time frames. It is near the 21 EMA. It's breaking that resistance level. And then on the 5-minute chart, I have all this volume coming in. And so that was helping me choose to go directional. And like I said, like I have right here as well, there was a squeeze, that momentum shifted higher off right there, and I was targeting, I believe I had a well, actually it says right here, 140, 130, 150. So I should have went further out, but anyways, point is I targeted this area, and there was a lot of indication showing that we're going to go higher due to the green 10x bars, the momentum on the squeeze chart, and the volume coming in on the up move. That's all I want to show you there. All right, so now comes the iron condor part. All right, so like I said, whenever the ADX is below 20, you get there's no conviction or a sense of direction, right? So you have yellow 10x bars on multiple time frames. There is obvious resistance right here. And there was also no squeeze, meaning that there was dark blue bars. All right, now this is the weekly wires chart. So this is what I need to explain for a second. All right, the weekly wires bundle that you get, it goes over a few things. So you have the weekly on this side, and this is the bi-weekly. See, this one and those labels do not come with the package, but everything else does. So the bi-weekly, this is telling me that this, actually before I go into it, so what it does is it paints levels on your charts. So I have H2 up here, H1, so high level 1, high level 2, low level 1, and low level 2. As far as how these levels are painted, it's not really said, but I believe it has to do something with the average delta that it moves per rolling period. So these specific levels, it dictated this based off of analyzing 267 rolling 2-week periods, almost 5 years worth of data. And what is it telling me? It is telling me, well, first we'll look at the blue one because that's what I look at. So total closes, let me get a different color here. All right, total closes inside H1 and L1 is done at 144 times, and it has a 53.7% times it's happened. So 53.7, roughly 54% of the time, it closes between these two levels. And now you have H2 and L2. It has closed inside them 224 times, and it happens 84% of the time. And then these other boxes, what it tells you is it has touched H1, which is high 1, which would be this one. Oh, sorry, that's H2. This one is H1. It has touched H2 and above, and it's gone 49% of the time. It closes above H1 roughly 30% of the time, and then it will only touch H2 16% of the time, and it'll only close above it less than 10% of the time. And the same goes for the low end. It will touch L1 31% of the time and close below it 17, and so on and so forth. You get the picture. So it's giving you statistics over a 5-year period that every 2 weeks if it will touch these lines or close outside of them. And then it does the same over here, except just on a week basis. So this is for 2 weeks. This is just 1 week. Now, what I do with this information is I get my yellow 10x bars. So that's telling me there's no trend, right? No momentum going either direction. All right, cool. So I have no direction. Now, statistically, where are my strikes? So I could get a high probability iron condor. So what I do, like what I did right here on Lockheed Martin, is we even go back. So I sold the 405 and sold the 375. So what I do is I go, and those are my sell strikes. I sell right outside those levels because it's telling me, for one, there's no direction because I have the yellow 10x bars. Statistically, over 5 years, it doesn't close outside of this 54% of the time. And there's also not a squeeze present, so a big move shouldn't happen, or an outside unexpected move shouldn't happen. And also, there is resistance above head, above the thing like I had like I have right here. So in this, I risked $250 and I made $413. Not a huge winner, but its probability is high. So that's what I do with these. And I'll show you another example. Hopefully that makes sense. All right, so I have ADSK. I risked 400, made after commissions and whatnot 556. Same thing here. Yellow 10x bars, right? And for this trade, what I've been doing is I've been putting these dotted lines for my break-even points. So those are my break-even points for the duration of the trade. So you see right here how it's sideways or yellow on multiple time frames. All right, go to my weekly wires chart. I sold the strikes right outside of these levels, which it closes inside them 54% of the time. So already I have a 54% chance, just statistically over the 5 years, that I'll close in there. And then I have the yellow 10x bars. And then there was no squeeze. So then you can see how it closed. Where's my... Here it is. So I entered the trade on this day. Closed it on this day. But you can see it did stay there. Or within that range the whole time. And I see it was a 10-day sell expiration iron condor. I got it for 115. I closed it for 83%. All right, so that is, so it looks like this. So you get it on everything in it right now. If you know, the market is kind of like in a correction, and we are way outside of it right now. And so I want to share with y'all as well. We are now painting. Sorry about that. And now we are painting the very first 10x bar on the ES futures. And then if you look at the 10x bars, you can see that it oops, hold on. Sorry guys. it doesn't just typically do one bar for a whole lot. Usually it trends quite a bit one way or another, whatever bar it's doing. If we get, like over here when the first correction happened in March with the COVID stuff started hitting, see the volume coming in on those? And then we went all the way down. And also, if you're curious so this line right here, this is the average 21 bar low, and this green line right here is the average 21 bar high. That's what those arrows mean. If you're familiar with the turtle traders, it's where they would buy the 21 bar, the high of low bar. They would buy that breakout type of thing. And those indicators come with the 10x bar package if you wish to get it, and it will explain everything. And then if you look over here now, I know there's kind of a lot of lines on my chart. And so like this line right here, that's the all-time high prior to the COVID way over there, and this is the second one right below it. This grayed out level right here, that is a gap that happened before COVID, and you can see every time we get there it kind of bounces out, except for yesterday where we shot right through it. So anyways, that is the 10x bars, and that is how I use the 10x bars in conjunction with the Squeeze Pro and the weekly wires. I really do enjoy Iron Condors with the weekly wires. They seem to be very, very consistent, and it seems to work pretty well. Like if I look at the SPY, so before all the, if you ignore this week where things have been a little bit out of norm, we'll say, like, so this is not your normal market condition where you shouldn't be doing Iron Condors anyways, but in normal conditions, so we opened here and you can see how it never touched that, and then even on the big, whenever we opened up on this Monday and we tanked, we stopped at those levels and we tend to bounce up from it. Anyways, it seems to be pretty spot on. It does make high probability trades. In the description box below, I'll be providing some links for you if you wish to get these indicators or classes with the indicators and whatnot. You could purchase them at a discount from Simpler Trading, and yeah, I found them very helpful. If you have any questions, please go ahead and ask in the comment section below as well, and I will definitely answer them. Found this video helpful, give me a thumbs up, subscribe if you're new here, share with your friends, and yeah. Good luck. Be safe out there trading, as it is getting a little bit crazy. And yeah, take care, everybody.